Toyota Motor Corporation. Is this a stock you should buy right now? That's what we're going to try to answer here in this analysis video. I like to simplify things, and I'm going to discuss 6 metrics in this analysis: earnings growth, PE ratio, dividends, return on equity, free cash flow, and intrinsic value. They're then put on a 0 to 99 grade scale so it's easier to visualize the different numbers I'm going to throw at you in this video. The first 5 metrics mostly deal with how good of a business we have. No point investing if it's an undervalued piece of crap. That's why I save intrinsic value near the end. Earnings growth is by far the most important metric. A company that doesn't grow doesn't survive for long. Toyota has great growth at 10.88% per year going forward. You always want to see a company continually growing, especially in this industry. For PE ratio, most people look at it as a valuation metric. I don't base my intrinsic value on the PE ratio. The PE ratio to me is a measurement of hype. Too high and there's just too many eager eyes on the stock. Too low and we might have a hidden gem. Toyota has a good PE ratio of 10.84, maybe because it's a Japanese company, but there's still not that much hype around the stock. Dividends should be an obvious metric and something a lot of people ignore. I'm going to put it out there. If you buy a stock that doesn't pay you anything, you're speculating, you're not investing. Toyota pays a nice dividend at 2.55%. From everything else so far, paying you this much to hold is quite attractive. For return on equity, it tells me a lot about the management. It shows me how efficiently my investment dollars will be treated if I were to buy the stock. Toyota has decent management with an ROE of 10.6%. That's alright, especially in this type of industry, but overall, it's just okay. Free cash flow is my way to quickly evaluate how dominant of a company we're dealing with. The more cash available, the better opportunities to buy up other companies, the better to research, and more money for marketing. Toyota has no cash flow, in fact negative, to the tune of negative $5.16 billion. That just-in-time model doesn't leave much room for expansion, and that's a problem with how competitive the car industry is. Okay, as I said, these 5 metrics we just went over tell me what kind of business we're dealing with. With the business grade of 64, we're dealing with a nice business. Aside from the lack of free cash available, everything looks promising. But before we get our intrinsic value, consider joining my Patreon and get access to every grade from every company I've analyzed. It's updated all the time. Go to patreon.com/GrowthShares or click on the link in the description. As I said, we know what kind of business we have, but let's see what the price tells us in terms of attractiveness. Nonetheless, Toyota is worth $172 per share. Right now, we're looking at a fairly valued stock. Everything looks nice and it reflects that in its current stock price. And now that we've got all the numbers down, we put it all together and get our final grade. Toyota has a final grade of 63, and that makes it an above average long-term investment. For me, the basic fundamentals are spot on, but don't expect external expansion anytime soon. But hey, after this video comes out, anything can happen in the next few days, weeks, months, even years. But long-term is always longer than you expect. Keep this in mind. It took Warren Buffett 45 years to become a billionaire. Invest wisely, and as always, take care of your money.